Most finance YouTubers won't show you their real portfolio. I'm going to do that with the winners and the losers. Mistakes and home runs, one stock up over 300%, one stock down 29%, and 17 positions across 2 different brokers. Here's exactly what I own and the 5 lessons that I've learned along the way. By the end of this video, you're going to see my biggest winners, my biggest losers, and the framework I use to invest in. If you enjoy this kind of honest investing content and you're a long-term investor, please subscribe to this channel. I post at least 5 videos per week for long-term investors. Now, quick context, my portfolio is split across 2 brokers. I did that primarily to diversify risk, not keeping all eggs in one basket, and also just a little bit of a different strategy on one than the other. So I use eToro for some positions and Interactive Brokers for others. I have 17 positions in total across them, with a mix of long-term ETF holdings, individual stocks, and a small crypto allocation. Now, that crypto allocation I actually keep on a ledger, so it's separate from this, and that's quite a sizable amount. And to be honest, it's mostly in Bitcoin. I did have some smaller other cryptos, but I ended up just consolidating them into Bitcoin. That's really the only crypto that I own. And if you've watched some of my other videos, I would consider that as a 5% allocation in my portfolio. Frankly, it's like a lot bigger than I'd rather be comfortable with. But the main portfolios are also growing at the same time, so it's cool. My total return on what I've invested so far, taking crypto out of the equation, just on the stocks and ETF is positive 30%. Now, because the portfolio is quite diversified, I've been able to take hits and I've also been able to take winners. But overall, the picture is 30% positive up. And that's the reality that most YouTubers won't tell you about. They will just tell you their wins and they won't tell you their losses. I'm trying to diversify my risk and have an overall positive projection. And the structure of this isn't random. Every position is in a specific bucket. And over the years, I've got better and more organized with this, particularly in the last 1 or 2 years. I've really allocated it strictly to some of the buckets that I've talked about in other videos, and that we'll cover in more detail if people are interested later on. But mostly it's about foundation allocation, growth allocation, cash cow allocation, which is dividend paying stocks, indexes, ETFs, deep value, and Las Vegas stocks such as crypto as well that I can put in there. Now, in this video, I'm going to walk through 5 of my investments and tell you what each one taught me. First position, VTI, Vanguard Total Stock Market ETF. This is my single largest holding, and over the years, it's up 44%. I made a whole video on VTI recently. You can check it out on my channel. And the short version of it is the VTI gives me ownership of every major US public company in one ticker. That's over 3,500 stocks with 0.03% fees. So if I have 10K invested, I pay about $30 for the privilege of having those people choose what stocks, what percentages go in there. And I don't have to think about it. I just dollar cost average in. And you can see the trajectory of this investment over the years. It's always growing, going gradually up and getting better and better. And it's the foundation of my entire portfolio. And it's something that I will always dollar cost average in every single month. And the lesson I want to give you from this investment is that you need to build a foundation of investment before you start chasing hype. Most investors get this wrong. They get FOMO, they chase after the hot stocks before it's too late. They buy at the top and they sell at the bottom. What you should do is build the foundation to invest from. Slow growth is a great one for this one, and this ETF is always growing. Position 2 is one of my biggest winners, and that is Samsung Electrics, which I had an over 300% return on. How did I get such a great return on this one? Well, we need to understand the backstory of what went on, what I saw. So in December 2024, South Korea's president at the time declared martial law, and it lasted 6 hours before being reversed. The country went into political chaos, and the Korean stock market crashed. Samsung, one of the biggest stocks in Korea, dropped along with it. I looked at that and I asked the question that every deep value investor should ask. Is this problem permanent or temporary? Because in my eyes, I've always known Samsung is a great company that has always been innovating. And I thought that is massively undervalued and this thing is going to turn around quite quickly. And it's not really related to that company. This kind of political turmoil always resolves itself. If you invested, for example, when the tariff drama was going on, you had a great entry point because those are all good stocks, you have to remember. They're all going to keep growing. It's just this blip that when you can dive into it, the fundamental thesis of that company is still strong. It's just drama around it. And that can be a great buying opportunity. I saw that huge drop and I thought that is an amazing time to get in. And I deployed as much as I could into it at that time. So there's two things to learn from that. What I've just said is that, yeah, you should understand great companies and separate them from drama. When you see there's drama and you can see that this is not going to affect it long term, that can be a great entry point. And then the second point is that you should always have spare capital to deploy when that happens. You don't want to be scrambling and trying to get money from other stocks or other investments to throw in there. You should ideally have a nice chunk of cash on your trading broker platform, whatever, ready to throw into stuff like that. Position 3, NVIDIA. This is one of my winners as well. That's up 66% and it's sitting in my growth bucket. I bought NVIDIA before the AI boom really took off. And the thesis for me was simple. I was seeing this appear on multiple analyst lists and I saw the trend of the AI trajectories was going up all the time. Whoever made the chips that power AI is going to be the most important company in tech. And NVIDIA is that company. I didn't know that they would 10x. I just chose them because they had a strong thesis, great leadership, and a lot of people were talking about them, putting them on their watch list. And I just was lucky enough to see that and keep dollar cost averaging into it every month for some time. Now, I'm not really buying into it at the moment. If it drops more, I will, but it's still a strong backbone in my portfolio. And I've taken my trimmings of winnings from there along the way as well. So I've got back my main investment into it, as well as compounding growth into the future. Now, the next one that I want to talk about is actually one of my biggest losses. It's down 80%. And to be honest, this was one of the ones that I just made all the mistakes on that I've covered in other videos. I bought it without looking into the fundamentals of the leadership, and I just bought it purely on FOMO. It was Gemini Space Station. And I bought it when it IPO'd because I knew the Winklevoss brothers were big players in the Bitcoin cryptocurrency scene. They were behind Facebook foundations. So I thought these two are great guys. It's going to explode, but literally it imploded and they've got all these kind of fraud lawsuits against them and it's just dying slowly. To be honest, I'm going to keep it open. You never know, it might turn around. I didn't deploy a large amount of capital in there, so I'm willing to take the risk. But the lesson to be learned is don't put more that you can afford to lose into it. Research the company more. Don't buy an IPO peak hype, which I've talked about in many videos before, and just stick to your principles. Discipline matters above all else. Now, here are the lessons I've learned from those positions. 1, foundation before excitement. VTI is my biggest position. It's boring, but it's stable. It's growth. And that foundation makes everything else possible. They also pay dividends, so I can reinvest those profits. 2, buy fear when fundamentals are intact. Samsung was a great buy because I knew the fundamentals were intact, but it was just a fear thesis that was happening. I knew it was short term, and I believed in the long-term thesis of that company. And that gap is where most investors make their best money, knowing that the company is just going through some drama, but it has a great long-term projection. It's a great, solid company still. 3, identify clear trends and hold through volatility. NVIDIA worked because I held through the dips. I was looking at the long-term picture. The thesis was right. And most investors tend to trade out of winners easily. A lot of people told me, hey, you should sell now. Hey, you should sell now. But I held on because I knew it would keep going up more and more. I trimmed along the way, but I held majority of it. 4, bucket discipline beats stock picking. My bad investment into Gemini Space Station taught me that discipline is the most important thing in investing. You have to have your principles and have the discipline to stick with them. When you get FOMO'd into stuff, you need to come back to disciplines and principles and make sure that what you're doing is the right thing. We can't be right every time, but at least if we follow a system and we can update that system rather than being emotional and not really knowing what we're doing and being able to explain why we're doing it. That is too random. That is too chaotic. That is the casino. That is gambling. So that's my real portfolio. 17 positions, wins and losses. I can go into it more if other people want to know more about it. Feel free to ask questions as well. And I will give you as much information as I can. And I hope that you got value from it. And if you enjoyed this video, please subscribe for at least 5 videos every week for long-term investors.